Welcome back to the channel, guys. I wanted to cover off another fund that was requested in a previous video and in the Discord. I thought I'd cover a full spectrum of it. It is included in this, but I wanted to cover the global dividend ETF landscape. So we're going to take a deep dive into investing in high dividend yielding stocks that are worldwide coverage, compare the most important indices, discover the best ETFs tracking global dividend stocks, and understand the methodologies driving yields and cost. Okay, let's start off with the why question. So why invest in global dividend stocks? So an investment in high dividend yielding stocks is widely seen as a cornerstone of a solid income generating portfolio. Dividends are typically paid by highly profitable, established, and mature companies that generate consistent cash flows, making them inherently more stable during market turbulence. For investors seeking regular, reliable income, especially in times of fluctuating or low interest rates, dividend stocks provide attractive, tangible yields that outpace traditional fixed income vehicles. Furthermore, reinvesting these dividends over time harnesses the power of compounding, specifically driving long-term returns. Now, there are numerous distinct index concepts available for investing with ETFs in global high dividend equities. So choosing a global approach rather than a domestic one provides crucial geographical diversification, protecting your income stream from localized economic downturns and sector-specific risk. So if we look at the general expense ratios for these types of funds, it sits between 0.25% and 0.5%. The total annual cost of holding global dividend ETFs make them a highly cost-effective way to secure diversified income. Now, there are 17 indices. So these are the global benchmarks, so distinct index methodologies tracking global dividend stocks, ranging from simple yield weighting to complex ESG and quality filters. There are 22 ETFs available using these vehicles. The total number of exchange-traded funds on the market specifically focus on delivering global dividend equity exposure. So if we start to look at kind of the market leaders, so when selecting a global dividend ETF, methodology matters, but so do the fundamentals. So we're going to look at the 1-year returns, assets under management, and total expense ratio costs. So for the 1-year return, top performers being the VanEck Morningstar at 26.76%, the STOXX STOXX 100, 26.36%, and the Global X Super Dividend at 21%. And I have done a separate video on the Global X Super Dividend, so if you haven't seen that, you can go and watch that after this one. We've then got the heavyweights, so from fund size perspective, so we've got the Vanguard FTSE distributing, which is 6.7 billion pounds. We've got the VanEck Morningstar, which is 5.8 billion pounds, and the Vanguard FTSE at 1.6 billion pounds. If we now look at the most affordable, so this is the lowest TER, so we've got the HSBC Plus World at 0.25%, the STOXX MSCI ESG at 0.25%, and the L&G Global Equity 0.29%. And again, I've done the latest L&G fund in a separate video as well. So if you want to go back and watch that one after this one as well, you can do. Why does expense ratios matter so much? So low expense ratios are crucial for dividend investors. High fees directly eat into your dividend yield, reducing your compounding over time. And by the way, guys, if you are enjoying this video, please hit the like button. It means a lot to me. It tells me that I'm actually producing quality content for you guys. It also tells YouTube that I'm also providing quality content. And if you haven't already, please hit that subscribe button. It also shows support to me and the channel. Thanks a lot. Okay, moving on. If we start to talk about the methodologies and the indexes now. So not all dividend ETFs are created equal. The underlying index determines exactly which stocks are selected, how they're filtered for quality, and how they're weighted in the portfolio. So we're going to take a deep dive in the 5 most important global dividend index concepts. I will briefly cover the others. As I said, there are 17. If I was to go into the same depth for all of them, it will be a very long video. So I'm going to try and avoid that. But if people do want me to cover a specific index in isolation, then obviously let me know and I'll do that as well. So we're going to start off with probably the most popular one, which is the FTSE All World High Dividend Yield. So the FTSE All World High Dividend Yield Index tracks high dividend stocks from developed and emerging economies worldwide, selecting the stocks with the highest dividend yields from its parent index. However, excluding REITs, it aims to reflect 50% of the index market cap with 2,498 constituents. It is by far the broadest and largest available dividend index. The selection method is straightforward and based entirely on the expected dividend yield for the next 12 months. As I said, 4,220 stocks, developed and emerging markets. Constituents, 2,398 stocks as of October 2025. Selection, top 50% highest yielding stocks based on 12-month expected yield. And there are 2 ETFs that track this particular index. Oh, yeah, and its weighting is free float market cap. Okay, if we look at MSCI World High Dividend Yield Advanced Select, so this index focuses on the highest dividend stocks from developed countries worldwide, utilizing stringent quality and sustainability filters. It selects companies based on comprehensive quality factors and dividend strength. To be included, a stock must exhibit a dividend yield at least 30% above the underlying index average and demonstrate a non-negative dividend growth rate over the last 5 years. Furthermore, constituents are strictly filtered according to ESG criteria. So universe is 1,319 stocks, developed countries only. Constitutions is 201 strictly filtered stocks. Selection criteria, as I said, yield greater than 30% above average, ESG filters, and positive 5-year growth. Available vehicles. Now, there is only one ETF that tracks this index at the time of recording. The weighting is market cap, max 5% per stock. If we then look at the S&P Global Dividend Aristocrats, the Aristocrats methodology aims at long-term, high sustainable dividend growth rather than just high immediate yield. So a company is exclusively included if it has maintained at least 10 consecutive years of a controlled dividend policy with rising or stable dividend payments. Despite these extremely strict historical inclusion rules, the index implements caps on individual securities, sectors, and country weightings to ensure no cluster risk over concentration arises. So universe is 14,542 stocks via S&P Global BMI. Constitutes approximately 100 elite aristocrat stocks. Selection, 10 plus consecutive years of stable or increasing dividends. And there is one ETF that tracks this index, and weighting is indicative dividend yield. Next, we have the SG Global Quality Income. So, constructed by Societe Generale and calculated by Sol Active, this highly specialized index uniquely excludes the financial sector entirely. The rigorous selection process is based on comprehensive corporate quality criteria, specifically evaluating profitability, solvency, and internal efficiency alongside balance sheet valuation. To make the final cut, a firm's dividend yield must be at least 4%. Uniquely, this index completely avoids market cap bias by assigning equal weight to every selected stock. Exclusions, financial sector stocks are barred. Constitutes highly concentration, 25 to 75 stocks. Selection, yield greater than 4%, passing strict internal efficiencies and solvency checks. And there are 2 ETFs that track this particular index, and it is weighted equally. We then have the STOXX Global Select Dividend 100. This index takes a geographical balanced approach by performing a global aggregate out of 3 distinct regional indices. The STOXX Europe Select Dividend 30, the STOXX North American Select Dividend 40, and the STOXX Asia Pacific Select Dividend 30. So securities in each sub-region are vetted based on indicative dividend yields and historical dividend policy to ensure sustainability. companies are required to show a non-negative payout ratio capped at a maximum of 60% and a positive dividend growth over 5 years. The universe is the STOXX Global 1800 Index. Constitutes exactly 100 STOXX fixed regional quotas. Selection, as I said earlier, was positive 5-year growth, maximum 60% payout ratio limits. Available vehicles, one ETF tracks this index and its weighting indicative dividend yield. Okay, now, as I said, there are a lot of strategies in this space, and I've covered the 5 main ones. So what we're now going to do is cover off the remaining 12 methodologies. Let's start off with the Morningstar Developed Markets Dividend Leaders. So this focuses on high-yielding developed market equities with a consistent history of dividend payments and the ability to sustain them. We then have Fidelity Global Quality Income. This screens the global market for high-quality companies with fundamental attractive dividend yields and strong balance sheets. We then have the Sol Active Global Super Dividend, a high-yield focusing methodology that tracks 100 of the absolute highest dividend-paying equities globally and is equally weighted. We then have the MSCI World High Dividend Yield ESG. This applies strict ESG filters to the standard MSCI High Dividend Yield methodology. We then have the S&P Global Dividend Aristocrats screened. So this combines the 10-year stable dividend growth requirement of the Aristocrats index with modern sustainability and carbon screening. Number 11, we have the Liberty Q Global Dividend, a quantitative approach assessing quality and yield factors to select robust global equities poised for dividend payments. Number 12, we have the Wisdom Tree Global X US, excluding USA, quality dividend growth. So this targets dividend paying companies specifically outside the US that exhibit strong growth and quality characteristics. We've then got number 13, which is the L&G Global Quality Dividends, an active factor benchmark designed to capture global dividends by weighted stocks based on their fundamental quality score. Number 14, we have Active Quant Strategy World Equity, a quantitative, actively managed strategy utilized by HSBC, seeking high income from global equities rather than tracking a passive index. Number 15 is the Active Quant Strategy Emerging Markets, which applies quantitative income seeking models specifically tailored to the volatility and opportunities in emerging markets. Number 16 is Wisdom Tree's Global Quality Dividend Growth. So the broader version of the Wisdom Tree's methodology that includes US equities alongside international dividend growth stocks. And then number 17, finally, we have the MSCI World Quality Dividend, a standardized benchmark measuring the performance of global equities characterized by both high dividend yield and high quality traits. So there you go, guys. We've covered off the 17 indices that we have. Let's start to look at the ETF comparisons now that sit behind these indices. So I'm going to go to a detailed breakdown of the 10 largest global dividend ETFs, allowing you to see the size, structure, costs, replication methods, and profit distribution strategies. So if we start off with provider number 1, Vanguard FTSE All World High Dividend Distributing. Its index it's tracking is the FTSE All World High Dividend Yield. Its size is 6.7 billion and it has an expense ratio of 0.29%. It is distributing and the replication method is optimized sampling. We then have the VanEck Morningstar Dev Markets, and this is the one that someone asked me to cover. Its size is 5.8 billion and it has an expense ratio of 0.38. It is again distributing and is full replication. We then have the Vanguard FTSE All World High Div accumulating. So again, it follows the FTSE All World High Dividend Yield. It has a fund size of 1.6 billion, expense ratio of 0.29%. This is the accumulating version, and it is optimized sampling. We then have the SPDR S&P Global Dividend Aristocrats, which tracks the S&P Global Dividend Aristocrats Index. It is 1.1 billion. Expense ratio is 0.45%. It is distributing and it is full replication. We then have the iShares MSCI World Quality Dividend, which naturally follows the MSCI World High Dividend Advanced Select, which is 1 billion and expense ratio 0.38. It is distributing and it is full replication. We then have the STOXX Global Select 100, which follows the STOXX Global Select Dividend 100, which is 732 million, has 0.5 expense ratio, is distributing, and it's unfunded swap. We then have Fidelity Global Quality Income, and it follows the Fidelity Global Quality Income, 624 million, 0.4% expense ratio, distributing, and it is full replication. We then have the Global X Super Dividend UCITS distribution, Sole Active Global Super Dividend, 535 million and a 0.45 expense ratio, distributing, and it is full replication. We then have the HSBC Plus World Equity Income, which is against the Active Quant Strategy Index, 113 million and 0.25% expense ratio, distributing, and full replication. And then finally, we have Amond Global Equity Quality Income. Index is SG Global Quality Income, 103 million, 0.45% expense ratio, distributing, and unfunded swap. So that was the top 10 funds by size. Note lower TR expense ratios generally leads to better long-term compounding. So let's start to actually look at the top 10 performing actual ETFs. So a lot of this data is coming from Just ETF. So we're going to compare the highest multi-year returns across the global dividend ETF market, and data includes dividends as of month end. Okay, so if we start off with the best performing, it was the VanEck Morningstar Developed Markets Dividend Leaders, which had 6-month return of 17.4%, 1 year at 26.76%, and a 3-year at 57.14%. If we look at the next one, STOXX Global Select Dividend 100 Swap, it has a 6-month of 15.56%, 1 year of 26.36%, and 3 year of 40.24%. Followed by the Global X Super Dividend UCITS ETF distributing at 12.06%, 1 year was 21%, and 3 years has been 20%. Now, the accumulation has also appeared on the list, and that is 6 month at 11.99%, 1 year at 20.88%, and 3 year at 19.88%. So they'll naturally be fairly close to each other. We then have the Fidelity Global Quality Income hedged. 6th month is 12.91%, 1 year is 19.9%, 3 years is 54%. So what's interesting there is the 3 year has actually been quite near the top of the list. If we looked at the 3-year measure, it would actually be second on this list. If we look at the Amund Global Equity Quality Income GP hedge accumulating, it has 6 month of 10.5%, 1 year of 18.27%, and 3 year of 47.16%. And again, this would be representative being third place in the list. So one thing we need to bear in mind is that obviously some of these funds, you need to look at a broader time horizon, not just the short term. Another popular fund is the Vanguard FTSE All World High Dividend Yield, and the 6 month has been 12.93%, 1 year has been 15.96%, and the 3 year has been 38.96%. The accumulating version has performed fairly similarly at 12.91%, 15.94%, and 38.95% respectively. If we then look at the Amund Global Equity Income accumulating, it's 8.89%, 13.91%, and 32.40%. And then finally, if we look at the distributing version, it's 8.8%, 13.8%, and 32.51%. What's interesting is the hedge version actually did better by a couple of percentage points in the short and midterm, has actually done quite much better in the longer 3-year time frame. Okay, so summary and conclusion for this video. Investing in global dividend ETFs is a highly efficient way to generate passive income, hedged against localized market volatility, and build long-term wealth. However, as the data demonstrates, not all dividend ETFs are equal. A couple of things to bear in mind: methodology drives performance. Yield weighting, like the S&P Aristocrats, focuses on historical stability, while the highest yielding screening without strict caps, like the VanEck Morningstar ETF, can drive massive short-term outperformance. Understanding the underlying index rules is absolutely crucial. Size versus returns. So the absolute largest funds by A, like Vanguard's massive FTSE All-World ETFs, offer unparalleled liquidity and structural safety. But more concentration on quality filter active strategies have frequently topped the recent performing charts. And then finally, the hidden impact of costs. So with the total expense ratio generally ranging from 0.25% to 0.05%, selecting a cost-effective ETF is one of the few variables fully within your control. Lower fees ensure that more of the corporate dividend payout lands directly into portfolio to fuel that compounding engine. So there you go, guys. Hopefully this was a useful video on the slightly longer end, because I wanted to make sure I went into enough detail to help you guys make the right decisions. Let me know in the comments, by the way, which funds you've actually bought into. Are you planning to buy into any of them? Again, let me know. And I've done my best to try and give you the most accurate information as always, but it is challenging with the data out there. All right, guys, I will catch you on the next one.